Hello friends, we will be learning a concept in receivables management which is known as factoring. Try to understand what does factor do and what is the meaning of the arrangement which is factoring. Try to understand. Say the company name is X Limited. They are having average debtors every year of say 100 crore rupees. Sorry. With debtors, there are some cost affiliated to debtors. One is interest. Now, interest is the cost which is incurred because you are getting late payment. Is it alright? Other costs like bad debt, collection cost, and say discount. Discount is also a cost related to debtors because say if the goods are sold on credit for the period of 30 days and if your company is having a policy that if you pay within 10 days we will be giving you discount, then that discount is cost related to debtors. Now what I think is these are the costs which I need to incur if I need to do credit sales. But in credit, if I stop doing credit sales, there will be no sales because this is an industry norms that everyone gives goods on credit. What is the problem to me is not interest. Is it right? The pain, the cost which is in bad debt and collection cost is huge. Is it alright? There is a financial cost involved because there is a bad debt, but there is even non-financial cost involved that I need to telephone them, I need to worry about my bad debt. If someone does not pay me a very hefty amount, I might go into insolvency because I have not recovered the money for the goods which I have already sold. So there comes a company or arrangement who is a factor. He might be an individual, they might be a partnership firm, and it might be even a company. What a factor does is this. Factor says me, you don't worry about this. Is it alright? We undertake to take the risk of your bad debt as well as we will be collecting your debtors. So what you practically do is you sell your debtors to factor. Now they are no longer your debtors, they are debtors of your factor. And say debtor is having a credit period of say 3 months. Is it alright? Then factor will give you after 3 months the amount of debtors minus their commission. What does factor charge is commission. So it is like an insurance contract. Is it alright? But here's understand, all the pain of collection will be borne by factor. All the financial cost involved like bad debt will be like factor. Is it alright? So this is an exact agreement of factoring. Try to understand. X Limited versus factor. Let me rewrite it down. X Limited, factor. X Limited will give commission to factor and factor will insure the financial and non-financial risk of debtors. That is, it will insure bad debt, also collection cost. Sir, is it financially viable? See, it depends. But why this type of business are flourishing? Just because then business can concentrate on their mainstream business of production and selling of goods, rather than taking much of financial and non-financial pain of recovering from debtors. Is it alright? So this type of arrangement is termed as factoring. As a financial student, we will be only calculating financial cost of factoring. Financial cost of factoring basically is commission. Let's start it. But sometimes factor also finances you. So when the factor was liable to give you this 100 crore rupees, the factor was liable to give you after 3 months. But what factor does is, instead factor pays to X Limited today, and of course as they are paying you early, they will charge interest. So this is an ancillary service given by factor. They also finance this debtors. They will charge interest for that, and they will insure your risk of bad debt. They will charge commission for that. Is it correct? So factor may give you finance, then will charge interest. Factor insures your bad debt, and so it charges commission. Right. And sometimes in ICA examination intermediate, you find a question of factoring. Let us go to that particular question of factoring. Before going to that, let me tell you something about interest and discount. See, we have already understood, if factor gives you finance, if factor gives you early money, they will be charging the interest. If a factor bear this discount? See, it depends upon the agreement between X Limited and factoring company, but normally discount is not covered in factoring agreement. So if the question is asked, will not consider discount in factoring agreement. Let us do a question of ICAI of factoring. A firm has a total sales of 200 lakhs rupees, of which 80% is on credit. It is offering credit terms of 2/40, net 120. 2% discount if you pay within 40 days, otherwise you will be getting 120 days. This is a policy of a company towards debtors. Of the total, 50% of customers avail the discount and the balance pay in 120 days. Let me find out average credit period. Average credit period given to debtors. Some of them might pay in 40 days. Some of them might pay in 120 days. How many people pay in 40 days? 50%. How many people pay in 120 days? 50%. I am finding out weighted average. 20, 60 average period. For the purpose of calculation, I will be considering 80 days. Past experience indicates that bad debt losses are around 1% of credit sales. So those are bad debt losses. Let me even find out bad debt figure. Bad debt 200 lakhs, out of which 80% is credit. It is 160 lakhs. Multiplied by 1% is 1.6 lakhs. Let's start. The firm spends about 2,40,000 per annum as its administrative cost. So what is administrative cost? Is 2,40,000. This total cost is 4 lakhs of bad debt and debtors. These are avoidable. How this can be avoided? If you hire a factor, and a factor is prepared to buy the firm's receivable, he will charge 2% commission. He will charge 2% commission. He will pay advanced against receivable to the firm at an interest rate of 18%. So factor is hedging your risk also, and factor is giving you finance also. withholding 10% as reserve. What is the effective cost of factoring? Consider year as 360 days. If the bank finance for working capital is available at 14%, should the firm avail the factoring services? Here my answer will be differing from suggested, but understand, we'll be finding out a perfect answer. Alright. So let us first start. What is the credit sales? $200 into 80% is nothing but 160 lakhs. That's it. Alright. How much will be the amount of average debtors for what time period? 80 days. If the total sales per annum is of 160 days, see how I do it. If the total sales is 160 days, total sales for 360 days is 160 lakhs. What will be sales of 80 days? This is what we normally do. Total sales, 160 lakhs multiplied by 80 divided by 360, and we get answer of average debtors. So average debtors will be 160 into 80 divided by 360. $160 into 80 divided by 360. It is 35 lakh 55,556. 35 lakh 55,555 or 56 rupees will be average debtors. Start it. So please try to understand what will happen. For 80 days, there will be debtors, then it will rotate. Next 80 days, there will be next debtors. For 80 days, there will be debtors of 35 lakh 55,556 rupees, for which I will be hiring a factor. Is it all right? Let me calculate only for 80 days. So all the calculation will be for 80 days. First, will factor give me 35 lakh 55,556 rupees in advance? The answer is no. Is it all right? Because he will first reduce his commission. So what is his commission as in factor? The 2% as commission. But yes, he will pay advance against receivable to the firm at an interest rate of 18% after withholding 10% as reserve. So he is not financing 100%, he is financing only 90%. So first I will reduce 10% as a reserve. So it will be 3,55,556 or 55. Is it all? So they will finance only this much amount, 35 lakh 55,555 minus 3 lakh 55,555. It is 32 lakhs. Is it all right? Out of which they will reduce their commission. So this amount they are not financing. Why they will be reducing this? Because this is the money which is payable to the factor. By say in previous example we have taken X Limited. This company is a firm. Only firm name is written. So firms, it is firm's expenditure and it is factor's income. So factor will reduce from the amount they are giving to the particular person. So how much they will charge? See, understand, right now we are not talking about full year, we are talking only about 80 days. Is it all right? So how much amount of risk they are taking? 35 lakh 55,556. So 35 lakh 55,556 multiplied by 2% will be commission. Is it all right? So 35,55,555 multiplied by 2% is 71,111. So the remaining answer will be 35,55,556 minus, sorry, it will be 32 lakhs minus 71,111. There is nothing but 31,28,889. 31,28,889. This is the amount of which I will be receiving. Is it alright? 31,28,889 will be amount received. Is it alright? So let us first calculate interest on this. Interest will be 31,28,889. Now understand, in this factoring there are n numbers of assumptions that we are taking. Interest is levied on the net amount. Sometimes interest is levied also on this amount. Interest will never be levied on this amount. That's correct. But interest can be levied on 32 lakhs because actually the factor is giving you a finance of 32 lakhs. It is reducing the commission just because it is an expenditure for you and income for factor. So interest may be levied on this, may be levied on this. Both is a perfect answer and you will be getting full marks for same. Interest, and what is the rate of interest is 18% into 80 divided by 360. Is it all? This will be interest for 80 days, and interest for 80 days will be 31,28,889 multiplied by 0.18 multiplied by 80 divided by 360. It is 1,25,155. Rupees will be interest. Understand, again in suggested this figure is reduced from this figure, but please understand this is a fundamental thing. Interest is payable always at the end of the period, never at the beginning of the period. So if I reduce this amount from amount received, the interest is deducted today itself. So normally this cannot be the scenario. But if you reduce interest from this, then I will be reducing interest from this, assuming that interest is charged as on today. Interest is paid even as on today. Is it all? So assumed that interest is paid today. How much net amount? You see, with this weird assumption I am taking because this answer matches with the suggested. 31,28,889 minus 1,25,155, and I will be getting 30,03,734. 30,03,734 rupees net from the factor. Is it alright? So this is the net amount received by me after deduction even of interest. Is it alright? If I want to calculate my per annum cost, is it alright? What is my this is just the reserve. What are my cost for 80 days? 71,111. Then it is interest 1,25,155. Total will be 71,111 plus 1,25,155. It is 1,96,266 for 80 days. Then what will be for full year? is just a cross multiplication. 1,96,266 multiplied by 360 divided by 80, which will be 1,96,266 multiplied by 360 divided by 80, 8,83,197. 8,83,197 rupees. Is it all? Is my cost per annum. Now, what is the cost that I'm saving? Cost saved is 4 lakhs. Because this 4 lakhs now I would not have to incur. If I would not have to incur for finding out effective cost of factoring, this I will be reducing. Is it per annum figure? Yes. Minus cost saved is 4 lakh. This is 4,83,197 will be termed as effective cost. Is it all right? Then what is in terms of percentage we need to find out? 4,83,197. How much money I have borrowed? 30,03,734. Even if you take this figure, it is absolutely all right. You should not take this figure, is it not? Or this figure. How much amount I have borrowed is 30,03,734. Multiplied by 100 will be nothing but answer in percentage. 4,83,197 divided by 30,03,734 multiplied by 100 is nothing but 16.08%. Before you ask me any question, let me ask you this particular thing. This figure is per annum. Start it. This figure is of 80 days. How a per annum figure can be compared with 80 days? Try to concentrate this. If I borrow 100 rupees for 6 months and my cost is 10 rupees, that is interest cost is 10 rupees. Is it all? Again I borrow another 100 rupees for 6 months. My cost is say rupees 5. Now in 6 months I'm changing the cost, and this is nothing but interest cost. Is it all? I want to find out the percentage cost per annum. Percentage cost per annum. Is it all? Then what I'll do, I'll find out total cost per annum. This is cost of 6 months. This is cost of next 6 months. So per annum cost is 15 rupees divided by. Can you tell me how much money I have borrowed? 100 or 200 rupees? I have borrowed first 100, then 100. No, I have borrowed 100 plus 100 rupees. The answer is no. This is not correct. Start it. Why? 100 rupees I will be using for first 6 months. Then again 100 rupees I will be using for next 6 months. Then I am borrowing 100 rupees per annum. I am not borrowing 200 rupees per annum. I am borrowing 100 rupees per annum. So here only 100 rupees will be taken. Now understand the same question as I have asked. This figure is per annum. This figure is for 80 days. But understand, once this 80 days is completed, you will again borrow this. Once the again 80 days is completed, you will again borrow this. Is it all right? So you will be borrowing per annum only this figure. That is, in this case, it will be 100 rupees and not 200 rupees. Multiplied by 100 will be 15%. If you notice, 100 rupees we have taken off 6 months. It is not of 6 months. It is 100 rupees borrowed for first 6 months, 100 rupees borrowed for next 6 months. Totally 100 rupees borrowed per annum. It will never become 200. So this is a logic of finding out in this manner. Now, the book gives me second question, which is, if the bank finance for working capital is available at 14%, should the firm avail of factoring services? Is it all right? Now, what the suggested gives the answer, it compares directly the 16.08% with 14%, which cannot be compared. Why? 16.08% is an effective cost of factoring, which includes interest and which includes even an insurance contract, which is for bad debt as well as administrative cost. Is it all right? If you compare this two, then the answer is no, because the factoring is more costlier. But normally these two figures cannot be directly compared. Think again. So think again. This is just interest cost. Sorry, this is interest plus you are getting a service of insurance. This is just an interest cost. Believe me, even if I say so, can this two be compared? The answer is absolutely yes. Why? I'll tell you. This considers that cost saved due to bad debt and administrative cost. So this is an effective cost of factoring. If you do factoring, this will be your effective cost. And what will be effective cost if you go for own finances? 14%. As this is higher, in second answer, I will be writing down 14%. Should you avail factoring services? The answer is no, because cost of factoring is higher than cost of financing. This is a basic type of sum, n numbers of types only times only this type of question is asked in examination, whereby they normally tell you to find out effective cost of factoring, and this is how we will be finding out effective cost of factoring.